it's massive amounts of capacity to not only fill some voids, but in terms of regulatory void. You guys obviously used it to buy GE Capital's loans, but you're also using your balance sheet for just a vast amount of different reasons than some of the Wall Street guys are.
Yeah, we've kept our business relatively simple. We focus on transitional real estate, which is not really financeable via the CMBS market. So we've sort of positioned ourselves to compete a little bit more, in some cases, with some of the folks up here on the balance sheet lending side, where sort of the risk is retained on book, and it's not sort of a trading business. And we've liked that business because CMBS moves really quickly. Allocations go up and down internally at banks. You're exposed to the volatility of the markets. You can do really well at it. In a lot of cases, you would assume it just sort of fits better in a bank than it does in a place like ours. You got to have distribution. You got to have all that stuff. And so we haven't jumped into the CMBS origination business to date. The transitional space is actually still really good in our minds. It's constrained. It's not easy for banks, although a lot of them see the value in it and like to do it. There's a limit to how much any one bank can really do in transitional real estate lending. And that's where we've sort of made our business and grown it over the past handful of years. And I wouldn't say that right now it feels a little less competitive right now, especially for the bigger deals, and that might be a little bit of year end. But I also think it's just we see the end of capacity for these things. There'll be some new allocations next year that may change that. But I'd say we haven't seen a dramatic uptick in competition, and because these we're competing mostly against banks and they're holding it on their book. The structure has remained in place, and I think that's really important. Pricing for really, really good, high quality, sort of down the fairway stuff for the banks continues to grind in, and I see that continuing because banks need to put up money in safe places. But for things that take a little bit more thought, a little bit more transitional, we feel like we can underwrite that because it's what we like to own on the equity side of our business. I still see it as a good opportunity going forward, and I don't really see it changing a lot. And your regulatory comment, I think, sort of helps because it makes it harder to do that type of real estate lending on balance sheets. And you see, things like GE was a unique example. I think they were a big competitor of ours before they decided to exit the business, and it was all regulatory in nature, and their shareholders told them that it was time. So
Greta,